Money is changing, evolving right before our eyes. The way we perceive and interact with currency is undergoing a profound shift. The rise of digital currencies is transforming how we buy, sell, and save, impacting economies and individuals alike. This transformation is not just about technology. It's about access, efficiency, and the very nature of value. For centuries, we used coins, tangible representations of wealth and trade, banknotes, representing a promise of value backed by governments, and more recently, digital bank accounts, which allowed for electronic transfers and management of funds. Now, a new era is here, one that challenges traditional notions of money. Two main types of digital money are emerging, each with its own unique characteristics and implications. Central bank digital currencies, CBDCs, and stablecoins. CBDCs are digital versions of official currencies issued and regulated by central banks. Think digital dollars or euros, offering a new form of government-backed digital money. Stablecoins, created by private companies, are pegged to real-world assets like the US dollar, providing a more stable digital alternative, making them less volatile than cryptocurrencies like Bitcoin, which can experience significant price swings. Digital currencies promise faster, cheaper transactions and aim to include millions without access to traditional banks, fostering greater financial inclusion. Understanding CBDCs and stablecoins is key to grasping the future of money and its potential impact on our lives. Together, they're forcing us to rethink what money is, its role in society and its underlying value, and how it should work in the digital age, paving the way for a more efficient and accessible financial system. Central bank digital currencies, or CBDCs, represent a significant evolution in the world of finance. CBDCs are government-backed digital money, offering the same level of security and reliability as physical cash, but with the added convenience of being entirely online. Their main goals are to make payments faster, more efficient, and more accessible to a wider range of people. They also aim to ensure that everyone, regardless of their background or location, can use public money, especially as traditional cash use continues to decline in favor of digital alternatives. CBDCs can enable instant, low-cost transactions, streamlining the payment process for both consumers and businesses. Furthermore, they can help people without traditional bank accounts access essential financial services directly through their smartphones, promoting greater financial inclusion. Several countries like the Bahamas with their sand dollar, Nigeria with the Naira, and Ghana with the e-cedi are leading the way in CBDC adoption. They are using CBDCs to extend financial services to remote or underserved communities, bridging the gap in access to modern financial tools. And now, major economies around the world are also joining in this transformative movement. China's digital yuan is currently undergoing advanced trials, paving the way for widespread adoption. India's digital rupee is steadily gaining users, demonstrating its potential for mass adoption. And Russia is actively piloting its own digital ruble, exploring the possibilities of a digital future. These projects clearly demonstrate that governments are actively building the financial systems of the future, systems that are designed to be secure, inclusive, and importantly, state-controlled. CBDCs are not just theoretical ideas confined to research papers and policy discussions. They're rapidly becoming a tangible reality, transforming the financial landscape as we know it. They are actively shaping how money will function and be used by everyone across the globe. The race is officially on to modernize money and adapt it for the demands and opportunities of the digital world. While some countries have launched CBDCs, many more are testing or preparing their own digital currencies. The European Union is developing a digital euro to complement cash and strengthen monetary sovereignty. Japan, the UK, and Canada are piloting or researching digital versions of their currencies, ensuring security and stability. South Korea is testing a digital currency with 100,000 citizens, and Saudi Arabia is exploring CBDCs for faster bank-to-bank transactions. Over 100 countries, covering 95% of global GDP, are exploring CBDCs, making this a global movement. These efforts will shape the next era of public money, balancing innovation with stability. The world is on the brink of a major financial transition. While governments are actively exploring and developing central bank digital currencies, or CBDCs, private companies are also stepping up, driving rapid innovation in the stablecoin space. They're eager to shape the future of digital finance. Stablecoins are a type of digital currency, and they maintain a stable value by being pegged to reserve assets, most commonly the US dollar. This stability makes them particularly useful for everyday payments, offering a less volatile alternative to other cryptocurrencies. They're also valuable tools for trading, providing a stable asset to move in and out of positions quickly. And importantly, stablecoins facilitate sending money abroad, often at a lower cost and with greater speed than traditional methods. Two of the most well-known stablecoins are Tether, or USDT, and USD Coin, frequently referred to as USDC. These stablecoins are widely used across the globe for their ability to enable fast, low-fee transactions, and they serve as an increasingly important bridge connecting the world of crypto with traditional finance systems. Even major tech giants like Meta, Amazon, and Walmart have explored the possibilities of launching their own stablecoins, signaling the potential they see in this technology. The goal is to streamline payment processes, making them more efficient and ultimately reduce operational costs. Stablecoins are indeed offering innovative new ways to move money on a global scale, but their rapid growth and increasing adoption also raise important questions for regulators regarding financial stability and consumer protection. As a result, regulators around the world are watching this space very closely, aiming to strike a balance between fostering innovation and ensuring consumer protection from potential risks. Therefore, the future of stablecoins hinges on the development and implementation of smart rules that encourage further progress and innovation, all while keeping potential risks in check through effective risk management strategies. Private digital money is undoubtedly here to stay, and it's fundamentally changing the financial landscape as we know it. The rise of CBDCs and stablecoins marks a turning point in the history of money. Over 100 countries are exploring digital currencies, from global powers to small nations. The question isn't if money will go digital, but how it will be designed, regulated, and used. Digital currencies could make finance more inclusive and efficient, especially for those without access to banks. For businesses, they promise lower costs and faster payments, opening new markets. Policymakers must address privacy, security, and the balance between public and private money. The choices made now will shape the future of finance for everyone. The story of money is being rewritten, and its next chapter is just beginning.